Welcome to DACM Insights. This is a podcast where we bring interesting institutional grade crypto projects to institutional investors to hear about the exciting things happening in Web3. We think this space is still the most exciting, highest growth tech that there is in the world. So it's our pleasure to bring some of the founders that we respect and invest behind to present to you the businesses that are building and show you the real things that are happening in crypto. Thanks for joining us today, everyone. I'm excited to have Sid Powell from Maple with us. Sid's a founder that I met way back in 2020, a long time in crypto years. He's been working around crypto lending markets, around DeFi and CeFi over that period, seeing some pretty exciting ups and some pretty testing downs. Before we jump into the detail of our discussion today, Sid, it'd be good just to get a little bit of background about your journey, about how you made the jump into crypto, and a little bit of a snapshot of where Maple is today.
Yeah, for sure. And thanks for having me, Richard. Glad to be here. And as you mentioned, you and I, we go back a few years now. So for those who don't know me and don't know Maple, so I'm Sid Powell. I'm the CEO and co-founder of Maple Finance. We are an on-chain asset manager with a particular focus on institutional lending and credit. So we run around 2.7 billion in AUM today. We've done about 7 billion in loans over the last 5 years that we've been operating. And really the core product we offer is loans to institutions which are collateralized by, say, Bitcoin or ETH or Solana. And then we have a Bitcoin yield product. Now, with a product like that, it's probably not a surprise that I came from a TradFi background in banking. And I used to work at National Australia Bank and I was in the debt capital markets area. And so this involved helping lending companies to borrow so that they could give loans out, car loans, home loans to their clients. And then from there, I went to a smaller lending company and I started thinking about how could we use the blockchain to tokenize bonds, to do what I'd been doing in that space. And it was also where I met my co-founder, Joe. And so in the background in 2019, we were just doing this on the side. And then later in 2020, we were able to go full time on this.
I think we always, and for disclosure, we own the Syrup token attached to Sid's project. And we always look to own resilient projects that have the ability to monetize their positions within markets over time. Resilience is a word that I always think of when I think around Maple and yourself, Sid. You've seen some of the, as we mentioned, some of the highs of crypto markets, but you've definitely lived through and survived, to your credit, through some of the terrible lows. Probably a worst case scenario that any lender could ever face. How did you survive through that? And most importantly, what did you learn that you've taken on the journey to sort of accelerate out of that annus horribilis, as our former queen used to say?
Yeah, not a bad Latin term for it after all. So yeah, I mean, for those who aren't familiar with what happened in 2022, there were a number of large defaults, and that actually wiped out most of our competitors. So when we entered, we were actually, we were one of the smaller players in the space, and you had the biggest, the big three were Celsius, BlockFi, and Genesis, who between them probably accounted for 50 billion of loans and assets under management. And I attribute our survival, I think, was a couple of things. So we were running multiple different lending strategies. So I think that helped protect the business because it ensured something going wrong didn't impact the entire loan book. And then we're fortunate, I think we had some solid underwriting, which allowed us to avoid the bigger blow-ups of 2022. Wound up all of the exposure to Alameda more than 5 months before they went bust. And that was after just a very conservative read of their balance sheet. And then we also had declined Three Arrows Capital a couple of times, actually, off the back of issues that we found during our underwrite of their structure, their financials. And so I think missing those, really put us in a good position through 2022, but we didn't get through unscathed. There was still, a borrower default on the platform. But I think, you can't control what happens to you, but I think you can control how you react to it strategically and tactically. And I think what we were able to do was kind of see the opportunity in the in the carnage of 2022, which was our competitors were gone. The market of over-collateralized borrowing was totally underserved at that point. And so we were able to set up and move into that line of business. And from there, that's now the core of what we do. So prior to that, we had been doing more unsecured lending to market makers. After that, the core business we do, over $1 billion of loan book is over collateralized lending to institutions. So I think that was the real key takeaway, was take the opportunity, focus on areas that are underserved. It was about the most contrarian bet you could take in the world, was that lending would come back after 2022, but we were really quite convicted on that.
I think when we look across the industry landscape that you're faced with now, Sid, I think one of the most exciting dynamics we see is effectively the rise in the financialization of Bitcoin.
100%.
We've gone through a period of, post the launch of the ETFs, of what we'd say is a transition in material ownership of Bitcoin from what I'd say is the traditional tech-orientated Bitcoin maximalist type holders of Bitcoin, and we've seen a lot of that transition to what I'd say is the more traditional financial holder and financial engineers. On our count, up to 14% of Bitcoin's now held by ETFs and treasury codes. Which has benefited the rise of treasury codes like MicroStrategy, now called Strategy, equity companies that are effectively raising capital through multiple capital markets to buy and hold Bitcoin on market. In addition to that 14 or 15%, we've seen rise of hedge fund and financial engineers that hold Bitcoin. The logical next step after you hold Bitcoin and you enjoy the price appreciation is how do I maximize the return further? Is there anything I can do with this Bitcoin? I think that's where it's super interesting where Maple sits. You've got this growing hoard of Bitcoin that's been underutilized. How do you see that coming to market? What sort of products are you building now? How big can that market be as that sort of guerrilla Bitcoin, which has largely been out of DeFi markets to date, starts to enter the room?
Yeah, I think we started looking at this as a really big opportunity probably 6 to 9 months ago. And we spent a lot of time thinking about, where is there an opportunity to provide or generate yield for holders of Bitcoin, just given that for so long these people have just, it's been sitting in cold storage or custody earning nothing for them. Increasingly now there is a customer, which is, these Bitcoin treasury companies who are going to need to generate a yield on it to be competitive with each other. What MicroStrategy did was tremendously innovative. Is there a reason for the 20th company to do that? And so I think that's going to invite competition between them and push them towards Bitcoin yield products. What we were able to do in February was launch our own Bitcoin yield product that's since grown to about 180 mil assets under management. And what we provide is a staking strategy. And so for our clients, what it looks like to them is they give us, they lend us Bitcoin and they receive a yield back in Bitcoin. And for the duration that they're using the product, their Bitcoin sits in qualified custody and there's no risk of slashing. They don't have to accumulate points. They don't have to sell some kind of alternative token. They don't face lockups. And so they've really liked those aspects of the product. And for us, what's happening on the other side is that we are running a staking strategy in partnership with CoreDAO. So it's one of a new wave of Bitcoin L1s and L2s that offers, proof of stake and a kind of ecosystem built on top of Bitcoin staking. So we have a very good relationship with that team. What we do and the role we perform is we aggregate the Bitcoin. We ensure that it gets the best rewards rate. We source core tokens to be dual staked. And then we manage options hedging and sales of core tokens so that for our users, they just put in Bitcoin and get Bitcoin back as yield on the other side. So that product, I see a lot of growth for it. And one of the things we're going to be focused on over the rest of the year is creating, similar to what we've done in the past, creating a DeFi wrapper for this Bitcoin so that you can have a liquid staked version of it, which can accrue yield. And you can use that as collateral in on-chain lending markets. You could use it as collateral on centralized exchanges or to borrow against. And so we think that's going to be a huge unlock for this product and something we're tremendously excited about for the rest of the year. And we are seeing a lot more interest now from these corporate treasuries in exactly that product.
I mean, it's a huge market that's been completely untapped to date, well, largely untapped to date. So I think that's one of the best tailwinds we see in crypto, the ability to, release some of this value that Bitcoin that's passively sitting in wallets has. You also touched upon something else I wanted to follow up on there. You've built a business that straddles what I'd say is kind of two parts of the market that we face. That sort of that white glove sort of hybrid CeFi DeFi space to your with KYC clients and those sorts of things to a decentralized option around CeFi. How do you see the interplay between those two? And as we look sort of forward around Maple's growth, how do you see those sort of, two, not really competing, but two different parts of your business growing?
I think you're quite right to think of them as two different parts of our business, and I think of them as almost complements of each other. So the first product there is it's very institutional. You sign legal documents. You have to be an accredited investor and go through onboarding with us. And I think that's going to continue to appeal to regulated funds and high net worth family offices. And over time, what we want to do is we want to bridge in more traditional finance investors to use that segment, to sign up as fixed income investors with us. But over the last 12 months, the real growth story for us has been on this DeFi side of things. Under the hood, it's the same institutional yield. It's coming from loans over collateralized by Bitcoin and Sol and other large cap assets to, institutional clientele. But what we've been able to do with that product, Syrup USD, is to integrate it with the DeFi ecosystem. So from start, what we were able to do was get secondary markets. So you can instantly get in and out, which was a huge unlock for corporate treasuries, and some of these money market protocols. Because what they can't take is the risk of being locked in a product. From there, we were then able to parlay that to getting it accepted as collateral for some of the larger, on-chain lending protocols like Morpho, Euler, and we're currently going through onboarding with Aave, which is, of course, the largest DeFi lending protocol. And on top of that, we were able to get it integrated with Spark, so one of the dominant stablecoins on chain, the largest yield-bearing dollar stablecoin. And then about 4 weeks ago, we were able to push this cross-chain to Solana. So many different areas of growth, but primarily it's coming from these kind of almost B2B enterprise style partnerships in the DeFi ecosystem. Where we want to take the growth from here, though, is we're looking at getting it onboarded as collateral for perps exchanges. I think Hyperliquid has been one of the fantastic growth stories of the past 12 months, but perps in general are roaring. I know a number of very profitable perps exchanges, drift on Solana, and what we want to do is get Syrup USD onboarded as collateral there, and then continue to push it to other chains. So we think there is a tremendous amount of growth available for Syrup. But if you look at where the two products fall in our strategy as a company for Maple Finance, it gives us a unique structural advantage to be able to source capital from DeFi. When you look at who our competitors are in the CeFi lending space, Galaxy, Coinbase, Ledin, 2Prime, Arch, a number of these other players, we're probably the only one that has access to this DeFi source of funding. And so that's allowed us to continue growing even when the cycle slows for these other players. So longer term, I want to have both, but they each have different growth priorities.
We've spoken a lot about, I guess, the collateral on the borrow side. And then the what people receive is effectively stable coins, right? So maybe it's worthwhile touching upon, because we see that as a competitive advantage for you as well. You've got surging demand from people looking to effectively earn a yield on their Bitcoin, and you've got surging supply of stable coins on the other side of your book. So how do you monetize that growth? How does that give you a cost advantage over, say, a traditional lender? And how do you see that playing out as you sort of look forward a few years?
It's a really good question. And to tackle it at a high level first, I see these converging trends are why the total addressable market is so large, right? So you've got the Genius Act passing. That's going to enable much more growth of stablecoin supply as banks, asset managers, neobanks, and indeed the incumbent stablecoin issuers, Tether and Circle, continue to expand stablecoin supply, because that's, if you think of it, one way to think of that is the supply of stablecoins is the outer limit of how many loans we could do. And so if that goes from 250 billion where it is today to 2 trillion or 2.5 trillion, we have a 10x larger addressable market. And then the other complementary trend I would point out is the Bitcoinization of treasuries, or rather the financialization of Bitcoin, where it's making its way into more treasury balance sheets and more investor portfolios. So if you look at the two things we need to grow the over-collateralized lending business, it's more Bitcoin being held by people that can be used as collateral and more stablecoins that we can lend out. Now, if you look at why stablecoins are an advantage to us, you and I have talked before about how I view this as kind of the next technology paradigm for financial products. And I view our core business as pretty similar to what Apollo and Ares and Blackstone have done in the private credit space. But by being able to do it with stablecoins, we have a cost advantage and a distribution advantage over those players. So I have no marginal cost serving a borrower in Japan or London or Argentina or Sydney when it comes to lending them stablecoins. I can beam it out to any of those borrowers for the exact same cost, and it takes me exactly 3 seconds for the loan to hit their wallet. Whereas if you were to think of a credit fund based, say in Sydney, trying to serve raising capital in Australia and then trying to serve a borrower in Japan, how many legs of transaction and how many days of delay is that going to be to serve that borrower in Japan? It's multiple days, and there's multiple percentage points of cost involved in that. So I think we have an inherent advantage when we can do this in stablecoins, and it's also very easy for us to manage highly liquid collateral when we're taking Bitcoin.
And we've spoken a lot about the crypto collateral that you've been using, and that's a underserved and huge market that I think gives you sort of multiple years of growth. As we look beyond that, though, we're also starting to see what I think is a really exciting migration of real world assets into our crypto world.
Yeah.
Or the X stocks announcement this week of bringing a bunch of sort of tech stocks on chain and allowing the lending and trading of those on chain. The real world asset tokenization theme playing out, and what role will Maple play in that?
I see it as a huge opportunity for us because I think there's going to be a lot of friction for players like JP Morgan or the Apollos of the world to get into lending against the tokenized versions of those, because they would just say, well, we can already lend against the NASDAQ version. Why are we touching this stuff? But I see a tremendous pent-up demand for things like this. You can see it in the reception of Robinhood's announcement about doing tokenized versions of OpenAI and SpaceX, two, extremely hot companies at the moment where regular investors cannot get exposure to them because they're still private and unlisted. And so I see that tokenized equity as a huge opportunity for us, because people who are holding tokenized stocks are going to want to borrow stablecoins, not fiat, and regular lenders are not going to be comfortable with the tokenized versions of those collaterals. So I see that as like a really good short-term catalyst. And then over the medium term, I'm looking at assets like tokenized commercial real estate, tokenized residential real estate, that is ultimately the largest asset class in the world, real estate, and the one that generates the most fixed income instruments around it when you look at the RMBS market. So I view that as a huge opportunity. The blocker today, like when people look and go, why hasn't this taken off today? I would point to the lack of buy-side demand on chain. And I think that's just because it's still a relatively immature market, and you don't have investors who have 3 to 5 year time horizons coming on chain to purchase or invest in those assets. But as the space matures, so we've got the Genius Act, we're going to have a market structure bill later this year, that will open the gates for more, longer term conservative investors to come in who are interested in 3 to 5 year time horizons. And then we'll be able to serve those customers with, lending against commercial real estate, lending against residential real estate. So I view that as a huge potential catalyst and another wave for us to catch.
You mentioned some of the leaders in the traditional space, like the Apollos and the KKRs. How do you see them approaching your market? I mean, you're getting big enough now that they must have teams internally scouring and thinking about how do they respond to this sort of new market. How do you see their approach to the market? Do you need to respond to that, or you just keep accelerating as fast as you possibly can? What's the competitive dynamics you think that come through on the next few years?
It's a good question. You always have to be wary of your competitors. I mean, these are obviously incredibly smart teams. They're incredibly well resourced, and they have very low cost of capital. So how do we compete with that? I think we have to be nimble, and we've taken a bit of a different strategic approach. So I would look at them and say, what you've seen them do is tokenize their funds, and they're viewing on-chain asset management or on-chain markets as a place for them to distribute their existing products. So take a private credit fund, put in a token, and then sell the token to on-chain investors. I actually disagree that that's the most effective approach, because I think they're banking on the marginal crypto investor not having access to a Morgan Stanley or JP Morgan brokerage account already. And I just don't think that's the case. So I think what we've tried to do has been the opposite. We've said there is an attractive on-chain product here, which is lending against Bitcoin. It produces a high yield, it's short duration, it has very good downside protection, and you can't go to Morgan Stanley and buy that today. So my view is that over time, we'll be able to take that product, package it, and actually sell it to off-chain investors, the traditional investors who want a differentiated product. They're looking for alpha. They're looking for an edge. And the way I see it is this, this is asset-backed commercial paper that's yielding 2 to 4% above money market funds. But, you can get your cash back within 30 days if you need. And so I think we're taking the opposite kind of strategy to them. I do think they are going to come in over time. One of the issues they face is they're actually too costly to really do Bitcoin-backed lending where pricing is today. I don't even know that they're necessarily viewing it as an attractive space because they want to be lending at 10 to 12%, private credit rates, whereas we're out there today lending at 7 to 8%. And so we're kind of scooping up the institutional market there.
So where can Mabel get to? I mean, it's staggering the growth that we're seeing. I mean, you're doing month-on-month growth rates that financial services companies would struggle to do in a year. You've got a 2.7, as you mentioned, 2.7 billion book today. Where can it go to over the next 5 years? And it might be worthwhile just touching briefly upon how do you monetize that, and how does that come back to the Syrup token?
So yeah, I'll start with the monetization. So our business model is we earn roughly 150 basis points of the loan book outstanding. That's like roughly the take rate on interest that we receive. And so the loan book is about 1.1 billion. The 2.7 is the loan book plus the collateral that we have today. And what we want to get to over the next couple of years, so let's say the next 24 months, we would like to be at a $10 billion loan book. And at that point, you're making run rate revenue of about 125 to 150 million in annualized revenue. The way that makes it back to the Syrup token is that we have a buyback program in place. And currently we allocate around 20% of revenue. So run rate revenue today is about 13 million. Expenses are around in the 7 to 8 million range. So we're cash flow positive and profitable. And there's a buyback in place. So the token is bought back on market and then distributed to holders who are staking the token. So it's effectively a buyback and distribute model today. So if you stake the token, you receive a yield of around 3% today coming from the buyback. Over time, as that revenue grows, we're the type of business where we have operating leverage and financial leverage built in. So as revenues grow, it's increasing faster than our costs. You could actually see the buyback percentage could grow. At 150 million in run rate revenue, it could be north of 50%. That's used to do the buybacks, and so then you really are sort of cannibalizing those tokens outstanding. I think it's extremely important for protocols to differentiate themselves today by turning on the revenue switch and showing that they have users who are willing to pay for their service. And ultimately, the North Star you really should be thinking about is effectively earnings per token.
Well, Sid, thanks for joining us today. I mean, you've been one of the founders that I've had the honor to know over a longer period that saw something happening well before anyone else, took the risk to roll up their sleeves and build something, and has actually created what's an incredible business today. And we think something that's got super exciting growth prospects over the next sort of 5 to 10 years. As you've got tailwinds behind you, you've got a great team that sort of lived through the ups and downs in crypto, knows what they're doing, and just think it's a great time for you to now sort of reap the benefits of the hard work you've put in. So we're excited to be there on the journey. It's great that you could join us today and talk through some of your experiences and some of your learnings and where you want to take the business with our viewers. So look, thanks for taking the time to join us.
100%. Thanks for having me, Richard. It was a pleasure.
Thank you. Thanks everyone for listening to DACM Insights. If you found this interesting, please sign up to receive our weekly newsletter, and there'll be more of these coming as we look to introduce more projects that we find interesting across the crypto space to all of you.